The stock market just seems to be going higher and higher, but these are the three stocks I'm continuing to buy. So the first stock is Amazon. Well, Amazon currently trades at a price to earnings ratio of 35, which does seem quite pricey, especially considering the stock is only up 56% in the past 5 years, which means it's underperformed the S&P 500. Now the main reason for this is that Amazon is investing heavily into AI and AI infrastructure, like things such as data centers, which involve putting a lot of money up front and potentially seeing the rewards years down the line. I think a lot of people tend to forget that Amazon isn't just an e-commerce business, they also own AWS, which is the largest cloud computing service in the world. Just quickly, if you want to receive a free share worth up to £100 when you deposit just £1, then sign up to the stockbroker I use myself, which is Trading 212. But this deal is only available to the first 5 people who sign up using my link, so if you are interested, make sure you're quick. So when Amazon starts to reap the rewards of the AI infrastructure that they're investing into right now, I think the free cash flow of this company will explode. And this may sound like a bold statement, but I think Amazon could be the most valuable company in the next 5 to 10 years. Even with it currently trading at a market cap of around 2.47 trillion, which is around 2 trillion less than Nvidia. And I also think they'll massively expand the margins within the e-commerce business thanks to things such as autonomous vehicles and robots. Sometime in the not so far future, I think we'll get to the stage where Amazon will use autonomous vehicles to drive to your house and then a robot will deliver your package, which will of course increase their margins massively. And already Amazon has over 1 million robots working for it within the warehouses, doing things such as lifting heavy items and packaging items. The second company is ASML. After being a sleeping giant for a while now, ASML has absolutely exploded the past month with the stock up 24%, surpassing over $900 per share. Now I'm actually very lucky that around 2 weeks ago I bought into this stock, and I'm already up around 18% on my position. ASML does trade at a P ratio of 31, so I don't think it's an insanely undervalued stock at the moment, but I do think as a long-term investment it's a very solid stock. As ASML are one of the most monopolistic companies in the world, being the only company who can create the EUV machines, which create things such as chips and semiconductors, I think this company will continue to do well with the AI revolution that we're currently seeing. So I'm looking to continue to build my position up in ASML, and hopefully make it around a 5 to 10% allocation within my portfolio. The third stock is Microsoft. Microsoft is the most expensive company out of the three, but that is for good reason, as I believe Microsoft is the best tech company in the entire world. Again, it's trading at quite a premium valuation at the moment with a P ratio of around 38, but I think over the long term, this is still an incredible company to buy. Microsoft Azure, which has grown 39% year over year, which is the cloud computing service business, and they own Microsoft 365, which is one of the stickiest business models in the entire world, which means once you start using the service and products, you basically stick with it forever. And that is great for recurring revenue. If you enjoyed this video and want to see more finance videos, make sure to follow my page and double tap the screen.